Are you tired of your hard-earned money just sitting in a bank account, barely earning anything? Do you dream of a future where your money works for you, but feel overwhelmed by the world of investing? In this video, I'll break down what online investing really is, how it works step by step, and why it might be the smartest decision you'll ever make for your future. Online investing is simply the process of buying and managing financial assets through digital platforms. Instead of calling a traditional broker or visiting a bank, you use a website or a mobile app. This modern approach puts the power of the financial markets directly into your hands. It means you can invest in stocks, bonds, exchange-traded funds, ETFs, mutual funds, and even cryptocurrencies from your smartphone or computer. There's no need for extensive paperwork or intermediaries. It's just you, an internet connection, and a world of investment opportunities. Historically, investing was often seen as an exclusive club for the wealthy or those with specialized knowledge. High minimum investments and complex procedures created significant barriers. Today, technology has completely revolutionized this landscape, making investing truly democratic. The rise of user-friendly online brokerage platforms and mobile investing apps has been a game changer. These platforms have significantly lowered the entry barrier, allowing individuals to start investing with very small amounts of capital. You can now invest with as little as $50, $20, or even $5, thanks to features like fractional shares. Fractional shares allow you to buy a portion of a single stock, rather than needing to purchase an entire share. This means you don't need hundreds or thousands of euros to own a piece of a high-priced company. This accessibility empowers beginners to start their investment journey without needing a large initial sum. Getting started with online investing follows a straightforward process. Understanding these steps will help you feel more confident and prepared. It's simpler than you might imagine, designed for ease of use. First, you'll need to open an account with an online brokerage firm or investing app. Research different platforms to find one that suits your needs, considering factors like fees, available investments, and user interface. Many reputable platforms offer intuitive designs perfect for beginners. Once your account is set up, the next step is to deposit money into it. You can typically do this through bank transfers, debit cards, or other electronic payment methods. Start with an amount you're comfortable with, even if it's small, to get a feel for the process. Next, you'll choose your investments. This is where you decide what assets you want to buy, whether it's a specific company's stock, a diversified ETF, or a mutual fund. The platform will provide tools and information to help you research and select your investments. With your chosen investment, you simply place an order through the app or website. With just a few clicks, you'll own a piece of that company or fund. Your money then grows as the value of your investments rises, and you have the flexibility to sell them anytime you choose. While saving money in a bank account provides security, it often falls short in terms of wealth growth. Banks typically offer very low interest rates, often less than 1% annually. This meager return means your money barely keeps pace with or even loses value to inflation. Inflation is the gradual increase in prices over time, which reduces the purchasing power of your money. If your savings earn less than the inflation rate, your money is effectively losing value each year. This means you can buy less with the same amount of money in the future. Online investing, on the other hand, gives you access to assets that have historically grown significantly over time. The stock market, for example, has historically delivered average annual returns of 7 to 10% or more over long periods. This substantial difference in returns is key to building long-term wealth. This growth is largely due to the power of compounding, often called the eighth wonder of the world. Compounding means that your initial investment earns returns, and then those returns also start earning returns. Over time, this snowball effect can dramatically increase your wealth, far beyond what traditional savings can achieve. It's natural to have questions and concerns when starting something new, especially with your money. Many beginners worry about the risks involved in investing. While all investments carry some level of risk, understanding and managing these risks is crucial. Diversification is a key strategy to mitigate risk. This means spreading your investments across different assets, industries, or geographies. By not putting all your eggs in one basket, you reduce the impact if one particular investment performs poorly. Another common misconception is that you need a large sum of money to start investing. As we've discussed, fractional shares and low minimums on many platforms have debunked this myth. You can truly start with a small amount and gradually increase your contributions as you become more comfortable. Finally, some beginners fear that investing is too complicated or requires advanced financial knowledge. While there's always more to learn, modern online platforms are designed to be user-friendly. They provide educational resources and simplified interfaces, making it easier for anyone to get started. As you embark on your online investing journey, remember these essential tips to set yourself up for success. These principles will help you navigate the market wisely and build a strong foundation for your financial future. First, start simple and don't chase hype. Avoid getting caught up in speculative trends or get-rich-quick schemes. Instead, focus on safe, diversified options like index funds or exchange-traded funds, ETFs. These are low-cost, professionally managed funds that hold a basket of many different stocks or bonds, offering instant diversification. Second, always do your own research. While online platforms provide information, it's vital to understand what you're investing in. Don't just follow advice blindly. Educate yourself about the companies or funds you're considering and understand their underlying value and potential risks. Third, adopt a long-term perspective. Investing is not about getting rich overnight, it's about consistent growth over many years. Market fluctuations are normal, and trying to time the market often leads to poor results. Focus on your long-term goals and stay disciplined with your investment strategy. Finally, avoid emotional decisions. The stock market can be volatile, and it's easy to panic during downturns or get overly excited during upturns. Stick to your investment plan and don't let fear or greed dictate your actions. Regular, consistent contributions, regardless of market conditions, often yield the best results. So, you now understand that online investing is simply using accessible digital tools to grow your money, leveraging the same powerful financial instruments once reserved for the wealthy, but at a fraction of the cost. It's about taking control of your financial future and making your money work harder for you. This is just the beginning of your educational journey. If you're ready to see exactly how to put this knowledge into action and start online investing with just $50, make sure to watch next week's video where we'll walk through a live demonstration. Don't forget to like this video if you found it helpful, subscribe to our channel for more valuable insights, and hit the notification bell so you don't miss our upcoming content. We're Online Investment Compass, and we're here to help you invest smarter. What are your biggest concerns or questions about starting to invest? Share them in the comments below.